Hi, today's Saturday, May 26th. We're going to take a look at a few things today, a couple of recent market moves, and I want to start by looking at the market overall. So what I have on the screen right now is coin market cap, and it just sorts, the coins by market cap or price or what have you. And the reason I have this up is I want to talk about just cryptocurrencies in general and make a comparison to Dotcoms. So as you scroll through this, we've got over 1,000 cryptocurrencies now. And it's starting to draw comparisons for me is back to when there were .coms. So when the internet was, somewhat young, before we had Facebook and Google and all the big names, if you had a website, basically just a website, you were branded a .com. And as a result, a lot of those companies got really ridiculous valuations. Now, this is when people were really still trying to figure out the impact of the internet. And it didn't really matter if you had a warehouse or employees or revenue. If you had a website, you had an opportunity to leverage that into possibly even going public. A lot of companies did, and they didn't last very long because there's nothing behind them except a website. So when I start to look at coin market cap and I scroll through, 1,000 coins, and if you click on a few of them randomly, it really starts to remind me of the days of the .coms. Now, these coins have, they have a website. They'll have a white paper. But if you were to really take a look, over 700 of the coins that are on the coin market cap are just tokens, which means they're tokens on Ethereum or what have you. They're not necessarily even an operating blockchain. So the reason I draw this, making this comparison is, what happened with the .coms is, within a short period of time, the speculation died off and people wanted to see actual results. They wanted to see revenue. They wanted to see employees. They wanted to see manufacturing facilities. They wanted to see usage, utility, something beyond a website. And I think we're at the point in cryptocurrencies when the same thing is going to start happening. You're going to see a lot of these coins that are on CoinMarketCap with $100 million valuation. Just on this one page, I've heard of Salt, and that's it on this page. And this is all over 100 million in valuation. That's just looking at one page, 17 coins with over 100 million valuation. It's what, $1.7 billion. What are the odds that they're actually going to survive? And here's another interesting comparison to .coms. When the .com bubble started to burst and it was kind of a show me what you've got, put up or shut up situation, the companies would actually go bankrupt. And then once they went bankrupt, they went out of existence. In other words, the investors lost their money and the company was gone. This is going to be interesting with coins because coins by default, if they're actually a coin and not a token, have resiliency built in. If somebody's mining that coin, it could survive on conceivably little to no revenue for a very long time. And if it's traded somewhere, then it has a market. So you could have a zombie coin that doesn't have much behind it, but if it maintains its status on an exchange, continues to trade, who knows how long that zombie coin could last. So with all of that said, it's going to be very interesting to see how the market handles this coming consolidation. I promise you that we're not going to have 1,000 cryptocurrencies forever. What I think will likely happen is some of the top coins will survive, some of them will die, or at least fade, and we'll deal with however many top coins there are. But I think there'll be, maybe less than 5 to 10 total. There'll be more, but anyone that has any kind of usage. And if you want to check in on that, take a look at search engines. How many search engines are there? Maybe you can name 5, possibly 10. How many of those search engines matter? Very few. Okay, so that's what I wanted to say about the coin market cap in general. Now I want to take a look at this is a chart that was created by Willy Woo, and I'll link it in the description. He puts out some really great work, but he identified a pattern that's been in crypto, and he calls it a moon and 3 dead cats. And this is something you'll see on almost every crypto chart, where there's a huge spike to a moon level, peak. Then there's a crash or a re-entry. And then there's a series of dead cat bounces where it bounces up and then it dies again, bounces, dies, bounces one more time. And then after that third cat, it's the pattern is primed for a new or the coin is primed for a new pattern. So I think that's what we may be seeing with Bitcoin right now. This would be the moon, and then this is the first dead cat, and then the bounce off of that cat, second dead cat, the bounce off of that, and now we're going for another dead cat right here, and this happens to be at the 236 Fibonacci level for this pattern. We'll have one little small bounce back up, and then we may, be primed for another pattern. But I think we'll have, hopefully we'll see if we can hold this, bounce slightly, and then be primed maybe for July or August for something new. So that's an observation on the Bitcoin chart. So another thing I wanted to talk about was the Longtail. Longtail was a book that was written many years ago, and it talked about distribution of product SKUs inside of an industry. And it kind of compared Amazon's approach to selling everything there was. Everything there is, Amazon sells it. If you've never noticed, if you look at the Amazon logo, it has this arrow that goes from A to Z. So from A to Z, kind of represents Amazon's philosophy that they sell everything from A to Z. And, when you lay that on top of the long tail scenario, what a lot of companies had done is they just stayed inside of a niche where they sold their best sellers. And Amazon, with its unlimited, warehousing and technology, was able to sell everything. And what that opened up was my Amazon Echo just responded to me saying the word. I can't say Amazon anymore. So anyway, now it's Amazon Echo's talking to me again. So what happened was, by them opening up and selling all of these products, they became they made more money or they had more revenue from what was available to them in the long tail. And the further out this gets, the less of it they sell, but it just goes on forever. And it goes on so long that the sum of the long tail is actually more than the head of this chart or their best sellers. So with all of that said, I was looking at Bitcoin and Bitcoin Cash, and Bitcoin has defaulted defining itself as store of value, first and foremost. And so it's kind of limited itself to this best-selling product category or use case, and that's where it wants to be. And that's fine if that's how it wants to define itself. But when you start to compare it to Bitcoin Cash is going after point of sale, mobile payments, international money remittance, tokens. It could even support CryptoKitties or other things like CryptoKitties. And the list goes on and on. It can do notary service. And so it's a different philosophy from Bitcoin, which wants to be a store of value or a digital gold, whereas Bitcoin Cash is going after all the markets. And it occurred to me that Bitcoin Cash has taken the Amazon approach or the long tail approach, the A to Z approach of crypto. And I think that's actually really exciting. So that's one of the things I wanted to share. And this chart hopefully makes some sense to you. Another thing I wanted to share was I was linked to this article. And it's an article about the price plunge in Bitcoin Cash and, how the market is determining price, etc. And I'm just kind of scrolling through it. It's on cryptocurrency news.com. And as I'm scrolling through this article, all of a sudden I see that they quoted one of my tweets. So, they didn't ask me that. I don't really have a problem with it. It was just kind of fun to see that somebody picked up one of my tweets and put it into their article. Basically, what I was tweeting about was when Bitcoin Cash upgraded the network capacity, they can now do as many transactions per second as PayPal at a lower cost. So I simply looked at the market cap of PayPal and the market cap of Bitcoin Cash. And if I were to make Bitcoin Cash equal to the market cap of PayPal, that would be a Bitcoin Cash price of $6,000. And that's just in the PayPal, person-to-person money transfer. It doesn't account all the other things that Bitcoin Cash can do. So I thought that was pretty interesting. And so did somebody else because it got picked up. So that was kind of fun to see my tweet on somebody else's article. And then one last thing I want to share with you is this was a chart that I did on May 4th. So roughly, a little over 3 weeks ago. And I was using a Wyckoff distribution pattern to predict a price move. And I saw there was what I thought might have been a buying climax, a test of that. And then we were in the up thrust when I made this call. The closing price right around then was about 96.80 on Bitcoin. A lot of people thought we were going to break 10,000, et cetera, et cetera. So I made a call, and this is how it played out. So the up thrust went up a little bit beyond where I started it, not too much, and then started coming back down, did a bounce, kind of like this, not exactly nailed the level, came back up to the point of supply, down another little bounce, and now it's kind of fallen off. So, overall, I think this caught the general direction, if not the timing perfectly, but the general direction of all those moves. So I thought that was a pretty good call. I just wanted to share that. It's nice when a call works out that well. Anyway, that's all I've got for today. Thanks for listening. Like or subscribe or leave me a comment. I always like to get a comment. Even if you disagree with what I said, that's fine. Just be civil. I always appreciate a good comment. So thanks everyone for listening, and we'll see you next time.